We are awaiting the WPI data for the month of January. Okay, and it's come in at a deflation of minus 0.39%. That's what it's come in at. Remember, this compares to 0.11% on a month-on-month basis, and this compares to an estimate of 0.15%. So this is actually an excellent figure which is coming for the Jan WPI data, which is a deflation of 0.39% as opposed to an estimate of a growth of 0.15%. If you look at the trajectory of WPI since the past many months, it's been at 0%, etc. But this is a huge positive which is coming at a deflation of 0.4%. I think we have a couple of economists waiting by. We have Samiran joining in of Stancy, as well as a couple of other economists. But overall, it is a huge positive which is coming in for the WPI data, which is a decline of 0.4%. In fact, Sumera, if I look at the trajectory of the WPI inflation, we started at 5.17% in the month of January of last year, and look at where we are today. This would go down extremely well with the RBI. In fact, would possibly firm their decision in terms of, or firm the economists' view in terms of what the trajectory of the rate cuts could be going forward. So this is a big positive which is coming in, which is the deflation of 0.4%, which is coming for the WPI data. And remember that this compares to a CPI data of 5.11%.
The banks are reacting quite favorably to that. So look at that. Suddenly, we've seen an up move in the market, and the bigger banks, Bank of Baroda, then there's PNB, Axis, ICICI, Kotak Mahindra Bank. All of these banks are shooting up as we speak, and the yield APA is holding at 7.69.
Yes, I think this would be a big thumbs up in terms of going forward, what we could expect from the RBI, because, Sumera, once the CPI inflation or the revised CPI inflation came in at 5.11%, it increased expectations that at least there wasn't a huge bump up, and the expectation was that maybe the RBI would act in a favorable manner going forward, and maybe the rate cut or the amount of rate cuts could then be expanded, and this corroborates with that data that it's a deflation of 0.4% that is coming for January WPI. Samiran Chakraborty of Stancy joins in with his view as well. Samiran, it's a deflation of 0.4%, big surprise, and your thoughts?
Well, we were looking for a more flattish kind of a WPI, so it's a little bit of a surprise. WPI numbers have been printing at much lower levels compared to CPI, and because of good reasons, because it captures the global commodity price fall better than the CPI does. And also the disinflationary trend in the manufacturing component, which is a larger weight on WPI, is having a role to play. What would be interesting is that where the WPI month over month is showing a decline, the CPI month over month is actually higher. So that divergence at some point of time will get corrected. Let's see how it pans out.
Okay, we have a couple of other details which are coming out with regards to the WPI. In fact, the November WPI has now been revised lower to 0.17% decline as opposed to a 0.00% in the month of November. So that too is a positive, indicating that the trajectory was on a deflation trend for WPI in the past couple of months as opposed to just this. We have the wholesale food inflation, which has come 8% on the year. Manufactured products inflation at 1.05%. Fuel and power inflation is the big talking point. It's a decline of 10.69% on the year. We have primary inflation, which is coming at 3.27%. Non-food articles inflation, which is a decline of 4.07%. Wholesale basic metals inflation, which is a decline of 0.90%. So overall, it is that decline in fuel prices that has resulted in a big chunk of the WPI actually coming in on a deflationary trend. Samiran, going by the data, would that be a correct assumption? That fuel and power inflation, which declined 7.8% in the previous month, has now declined further by around 10% this month. The reason why we're seeing this deflation come through?
Yes, that's definitely a big positive. But what we have to keep in mind is that yesterday the petrol diesel price has been hiked. So from now on, you could see a little bit of a correction in this trend. But what is even more interesting is that the food inflation has shot up quite rapidly in WPI from very close to 0% a few months back. It's now up to about 8%. it shows you one thing, which is that the decline in food prices, which generally happens during November, December, January, this year the decline has not been as sharp as it was last year. So from that perspective, we have to keep a little bit of doubt in our mind that whether with a lag this will have an impact on CPI as well, particularly on the food side. The manufacturing inflation, the core inflation decline is definitely a positive. Last month it was about 1.6, now it's turned down to about 1%. So clearly that disinflationary process on the back of lower input prices is continuing.
Okay. Samiran, what about the fact that, the November inflation data has now been revised to a deflation of 0.17% as opposed to 0.00% earlier? Would that give you more confidence that the trajectory of WPI is now on the lower side and something that the RBI would take into cognizance as well?
Well, we know that RBI is focusing more on the CPI than on the WPI. So as long as the WPI remains very benign, I don't think every change in WPI, every revision would be looked at that closely by RBI. It is going to take comfort from the fact that all the inflation indices are now pointing downwards. I don't think there is a reason why RBI would be kind of too worried about a deflationary environment looking at the WPI prints at negative. As long as the CPI print is not showing any deflationary sign, I don't think we will get a response from the central bank, which is to control deflation.
Okay. Well, for the markets, we haven't seen that much of a reaction at this point in time. Just a little bit of an uptake to 88.36, but we're still in the range that we've been trading at for most of the trading session. But it is definitely a positive which is coming in. But like Samiran mentioned, maybe the CPI data would be more crucial for the RBI decision. But nonetheless, this is a big positive coming in. Indranil Pan, Chief Economist at Kotak Mahindra Bank, also joins in with his view. Indranil, your reading on the data as well as the food inflation, which has seen a little bit of an uptake this time.
Food inflation anyways, we were not really sort of seeing an uptick even in terms of our own estimates, in the sense that we are past the winter months and this is the time when actually vegetable prices tend to go higher. And cereals possibly also has sort of moved a little bit higher. So I'm not really worried about the food on the other side, because as Samiran was rightly pointing out, I think the focus of the RBI is more on the CPI, and in the CPI the food overall weightage has come down to a certain extent. So that doesn't really worry significantly at this point, except for the fact that we would actually go through another monsoon period soon, and we'll have to therefore wait for initial estimates from that side.
Okay, just to take you through a couple of breakup within the data points, we have pulses, which has seen an inflation of 12.34%. We have vegetables, which has spiked up 19.74%. We also have milk, which is up 17.19% for the month. So those are a couple of key data points with regards to food inflation, which has resulted in it coming in at around 8%. Egg, meat and fish as well has declined. So sorry, milk has come in at a growth of 9.13%. Fruits has come in at a growth of 17.19%. So that stands corrected. Overall, manufactured products inflation is a growth of 1.05%. Indranil, where does this leave the RBI? Does it give you more certainty about, further amount of rate cuts or a larger amount of rate cuts this fiscal, which a lot of economists were talking about post the CPI data?
I would we are still sticking to our additional 50 to 75 basis from now on, and simply because I think the 1.5 to 2% real rate that the RBI is looking at gels in with the 50 to 75. So based on the WPI, which we were anyways expecting to go down into the negative territory, and having also looked at the CPI, we have not really changed our forecasts on the rate cutting cycle, the extent and the depth of the rate cutting cycle of the Reserve Bank of India.
Okay. Samiran, what would your thoughts be come the April policy?
Well, after the new base year revision in CPI, we think that there is a possibility that the overall trajectory for CPI could come down by about 40 basis points. So from that perspective, we are now looking at an average CPI forecast for FY16 at 5.4%. That gives us confidence to think of another 75 basis point of rate cut from where we are today, in line with the 150 to 200 basis point real policy rate corridor indicated by RBI. Well, the risks are to the downside, because if oil prices stay very low, you could see inflation to be even lower. I think the WPI at this moment is at best a supporting evidence towards this inflation decline. I don't think there is any kind of a lead lag going on here between WPI and CPI which will worry RBI. So at this point, looking at about a 75 basis point of rate cut over the next few policies.
What can we expect in terms of an inflation trajectory for WPI? Say in the next 2 to 3 months, based on what you're seeing, and the fact that maybe there is a little bit of an inch up that we're seeing in Brent crude prices?
Well, the WPI could move up a little bit from where it is today, but since we are already in a kind of sort of deflationary territory, that should not worry RBI a whole lot. Again, the focus is going to stay on CPI. Even on CPI, till about March, the numbers are going to be slightly elevated, but come April to September period is when we expect the CPI to be in its most benign phase, and then probably the October-December quarter is when it's going to move up again a bit. But we don't think a big issue of RBI not meeting the 6% January 2016 target. That should be achieved quite easily. So from that perspective also, some amount of rate cuts, probably in a front-loaded fashion, will be quite possible.
Have you managed to calculate the core CPI, what it might have come at, considering it came in at a 60-month low of 1.3% in the previous month? Samiran?
Well, since the manufacturing CPI has dropped very substantially from 1.6 to 1.05, I think you should expect the core CPI also to drop from the 1.3 number that we had seen last time.
Closer to 1%?
I think so.
Okay. Indranil, what would your thoughts be in terms of maybe the future trajectory of WPI? And like Samiran mentioned, April to September, what would your figures be like?
No, I broadly agree with Samiran in terms of the bump down that the average would see over the next financial year. So we are also working with an average of 40 basis points lower from our previous average. So that's the reason I actually mentioned also that 50 to 75 basis points. Now the differential between the 50 to 75 basis points additional rate cut from the RBI comes from our thoughts on the currency side, in the sense that if there are negative repercussions out of the global scenario which leads to some amount of currency depreciation, then the RBI possibly might want to stop at a 50 basis points additional from now, rather than the 70 basis points which is determined by the 1.5% real rate. So at that point in time, they could actually be looking at a 2% real rate rather than a 1.5% real rate, and that's the reason why we have a 50 to 75 basis points additional from the Reserve Bank.
Okay, fair enough. What would your thoughts be on fuel and power in terms of a trajectory going forward? It's now at least declined or in deflation for the past 3 months as per my data, and it could be for more, but what could we expect in the coming months?
My first thoughts is that fuel anyway is a very volatile component even today, because as we talk and as we have sort of sat through the weekend, we have seen the oil prices, Brent crude, inching up towards the 61, and that is because the oil rigs in the US has come down very sharply. Now going forward, most of the estimates and the estimates that we are working with in terms of the crude is broadly a $60 to $70 a barrel, which to a certain extent will be also determined by the stand OPEC takes around the, I believe, the June or the July of 2015. So We are not really looking at $20 a barrel on the oil side. We are looking at relatively a 60 to 70. And if I'm talking of even a currency depreciation relative from this point, I don't think there is the similar benefit that will be repeated in the next few months.
Okay, and Samiran, what about you in terms of food inflation?
Well, as I was saying, that the decline in food inflation that typically happens over this period, the decline this time around looks like in the index has not been as much as last year, which has resulted in the year-over-year numbers being somewhat higher. We are observing that the global commodity price softening, particularly on food, is continuing. That's one positive. The second is rural demand decline is also continuing, which is another positive for food inflation. But not enough of structural supply side reforms have been undertaken as yet, which keeps us worried that if there is any kind of a negative supply side shock on food, then that can amplify into another significant risk in the middle of the year, particularly if the monsoon is not that good. But if we have a good monsoon, then we should see food inflation returning back to 5% or below, not at 8% plus, which it is today.
Okay, well, the markets have given up the little bit of gains that we saw. So maybe Samiran is right that this is just supportive data which is coming in for the markets at this point in time. So 8823 is currently where the Nifty is at. Samiran and Indranil, we're going to wrap up this conversation. But before we go, wanted your final thoughts in terms of how the RBI is going to read this number. And if in case there is a rate cut that you envisage, when will it be? Will it be post the budget, pre the April policy date, or maybe on the April policy date? And how would the WPI data be factored in to the RBI's decision? Indranil, you go first.
Yeah, WPI I don't think is a major decision maker. I think the CPI is number one, and number two, I think we are not really likely to see post the budget, simply because with the new based CPI and the new based GDP, the RBI would possibly need a couple of more data points to analyze the overall impact that is there on the economy. So our bet is 7th of April, 25 basis.
Okay, and how important would the fiscal deficit data be?
Fiscal deficit numbers would be important, but as I said that we are broadly working with a trajectory where we meet a 3.6%, and there is an additional sort of expenditure allocated for plan. But as I said, the critical issue for the Reserve Bank also will be the CPI, and they would like to see one more print at least in terms of the extent of the deflationary trend before they actually react.
Okay, and Samiran, over to you.
I think the fiscal number is important. If we get a good budget where RBI's precondition of high quality fiscal consolidation is maintained, then we cannot completely rule out an intermeeting rate cut post the CPI number on March 12th. But typically RBI would not like to have too many intermeeting rate cuts, so that might mean that the rate cut is deferred to April. But if we have a good budget and a good CPI print, and if RBI does not do an intermeeting rate cut, then the April rate cut could as well be a 50 basis point rate cut.
Okay. All right, gentlemen. Thanks very much for joining in and taking us through your views.